Alright, so welcome to Macro Crest. We focus on fundamentals for directional bias and technicals for entry. Welcome to 2026, a wonderful year. Should be looking at next week. We are looking at PMIs from the Euro and the US region. We have inflation data from Aussie. We have the inflation data from Swiss, and then we have the labor data from CAD and USD. Of course, there is inflation data from the China, but I didn't look at it that much. So, what we are looking at a decline in the labor data from the US. We are looking at unemployment rates rising to 6.7, which of course for the past five, 4 out of 5 times it has always been better for the CAD. So, let's look deeper into the information we've got. For FOMC, what we have here is the central bank. What they've been looking at, they are focused on the inflation data, yes. Sorry, the most important is the labor data. But then we also have the core inflation, but more focused on services ex housing and then the inflation condition and also downside on growth. But then uh, what they're expecting is that they're expecting that there should be gradual inflation cooling and there should be the labor data market should be softening but not collapse. Of course, that is kind of bearish for us. And then we look at what the market is expecting. So, what is the market expecting from this? The market is expecting that there should be a faster, deeper rate cut than the Fed guidance that we had in December. The yield curve and the market leans towards a labor-led easing cycle. So that is the labor data being bad. And then what we'll be looking at is that expectation is critical. Yes, of course, but in the next 1 month to 3 months, we are looking at weakness in the USD. So we are bearish. Now the driver is market repricing ahead of Fed baseline. The condition, failure condition will be that if inflation or the labor tightens, of course, what of recently it has been very, very bad. ECB will be looking at they are more focused on services, inflation, wage growth, and the rest. You can pause to look at it deeper. So I'm a little bit bullish on this. So the driver is because the expectation, ECB expectation holding versus the market overpricing cut, and there is no cut for now. So if we have a sharp wage in this inflation, of course, then we can look at weakness in that BOE. Focus on wage growth, services inflation, of course. And what we look at in this is that we are kind of bullish on GU. Now, the driver is central bank expectation is validated, but then we'll more focus on sharp wage deceleration. So that's what we'll be more focused on for GBUE, DOJ. They focus on sustainable wage, price, core inflation, and all that. But looking at this, I'm bearish. Now, why? Because the driver is mispricing BOJ normalization. Remember, they talked about not they're not going to hike, and then the failure will be sustained with inflation shock if there is a very massive inflation rise. Um, remember last year the BOJ said there's not going to hike at all. So the Swiss, the market, they're more focused on Swiss strength and stuff like that, but the driver here is low inflation. And then the condition is inflation rebound. If inflation can rebound, so as we saw here in this, the pricing is going to be higher than previous. The previous was in negative territory of negative 0.2. If we have 0.00, that's good, but if we have 0.1, that would be fantastic. So that will be Swiss strength. And then looking at card, we focus on inflation and the labor. Of course, we are kind of, I'm not entirely bearish on this because the labor data has been solid, right? Has been really, really solid. But we go to RBA, massively bullish on this. So they talk about not even holding, but probably hiking. So that was a solid one. Central bank expectation is validated, yes. So the labor, if we have a labor crack, then we look at shorting. NZD, we are also kind of mildly bullish because they specifically said they are not going to cut anymore. They'll be holding, so we're looking at kind of bullish on that. So we already know. So this is the two strongest, as we can see. This is neutral, exactly, and these are the two weakest. We work with that. So what do we do? Go to the chart, and what we've seen here is let's look at our Dixie. Okay, all right. So this was we got in Dixie. Dixie is bearish. Look at the monthly chart candle. Previous monthly candle is this. So if we're looking at weekly, is a weekly supply. For me, we are somehow at the weekly supply. So this movement is not too clear for me, and I'll not be too bothered. I'll just go to the charts looking at it, and the best I have here is the USD card. Why? On the monthly, first of all, this bearish momentum candle. Weekly, you're looking at a weekly supply zone, which is here. So I expect a, a drop from any of these points down. So this is high, very high probability. The same goes for the USD Swiss. The monthly we are bearish, yes, but the weekly also is a weekly supply. We are at a weekly supply. We're looking at the price pushing to the downside from that end. Look at it from your D1. So this is exactly what I talked about some 1 week ago or thereabout. GU, we're looking at GU based on GU strength, pound strength. On the weekly, sorry, on the monthly, we are bullish, yes. Weekly, where is price at? At weekly demand. But I think the weekly demand was already mitigated last week, yes. I did not participate in this because I closed for the year. So what I'm expecting is continuation to the upside for this. But if it should go lower, grab liquidity, I'll look to do better on that. Worst case scenario is price coming to this 1.3 to 500 area. And then we look at EU. It's not too solid, but I'll look at price coming to this point before we put long. Why? Because on the monthly is bullish. This I consider this liquidity. Why? Because it did not close above this point. So I would like to see price push higher from this point. AU, sorry. Yes, so this would be a push to the downside and then a bounce upside. This is fantastic. So this is what we'll be working on. Looking at it from a monthly, you can see previous monthly candle was bullish. Um, Weekly, what are we looking at? This is a weekly demand. So we're looking at price using that point. So if we talk about Aussie strength, Aussie yen, we focus on Aussie yen. This is price pushing higher, but I have to wait. If it pulls back lower to this point, yes, then we can long it. If it push higher, pulls back, then we can long. So there should be a demand formed from that point. And based on Aussie strength, the Euro Aussie looks bearish. So yes, the monthly time frame is bearish. this is bearish, but I can't see a supply I could work with. So what will happen is if we have this break, I'll look to continue to the downside. That's for Aussie strength. For card um, neutral, Swiss neutral, but let's just take it down step by step. Look at BTC a little bit. Um, okay, so BTC looks like it could push higher, right? But here's the problem I have. I expected a grab of liquidity from this point before push, but it's all good. We look at card yen, so I expect a bounce here to long. The Swiss yen is equivalent to the same thing. It's just a bounce from this point to long. Okay, so for the euro, we have EJ is equivalent to the same thing. The euro Swiss shorts, which worked last week. Okay, and then we now get to the pound. Yes, we talked about pound strength. We have the pound yen equivalently the same thing. So we also have pound NZD. Yes. So this is bullish. On the monthly is bullish. On the weekly, where are we? There's a weekly demand here. This previous weekly candle shows that we're looking at D1 demand. So everything, this is a high probability area. Let's see how it goes for that. And then we look at NZD kind of strength. So the strength is not showing that much. More showing technicals is showing me to the downside. The only technicals to the upside is the yen against the yen. So that's what I can work with. Um, for US oil, we look at Venezuela. There was a strike by the US and they've captured the president. And so Venezuela has a lot of the oil deposits. And if there's a lot of oil deposits, it means it's going to affect the price of oil. So what are we looking at? Yes, the prediction was that there's going to be a sell all through, but then we could have a pullback just because of this event. And previous candle was a doji, so we're looking at weekly supply. This looks like a supply to me, but previous candles were showing some kind of momentum to the upside. So if yes, this is a break, but it was not a close. If the next candle could, yes, we can have this. Why? Because probably the market has already priced in the effect. So looking at it from a monthly, um, this is what we've got. We are very bullish. Weekly demand. This is the only weekly demand we've got. The distance is quite far. We have this zone too. So this candle just closes this way. Is there demand? It's okay. So what I'm saying is a push to the downside from here. That's what I'm saying. We go to gold. Okay, so looking at this candle, this is bullish. This is demand area weekly. Okay, so this is my highest probability area for longs. It'd be fantastic if we could have this long from here, but I don't like this reaction. So what we're seeing here is if you're looking for a short, there's no short. I can't see any short, but what I might say is this, at least to this target first. So that's all we have for the week. This use risk management.